Okay, so this is a cycle 3, it's a trending issue, and it's important to relate with it because we expect the market actually to surprise us over here on that 30-minute chart. We're looking at the next target levels 169. We already did 168, but we're looking at 169 and 170. More importantly, we expect there's going to be some kind of a consolidation at this point, and on the higher degree weekly charts and daily charts, you see that we're doing an ending diagonal here on the daily, and this ending diagonal takes us to 172 and beyond. And most importantly, we have on that weekly chart, you have an ending diagonal here in that market top back in 2015 that took you all the way to 192. This ending diagonal. We have very wild swings inside of it. We think we are about to get into this now, but our coming ending diagonal will protract higher and can actually take us at least first to 176 before we have an internal correction to the top of that wave B, and then move on to 189 and 180. We expect to be doing a second head because this is related to this slanted neckline here. Double heads on that neckline. It's at the top of an internal 1 and an internal 1 too. If you actually update these labels, or if this is a bullish trend, we can see this. And if we take into consideration that this is an internal 1 and a 2, we're really in a degree 3 on the weekly chart. Degree 3 on the weekly chart has the potential to do another head. So we're either going to that neckline 176 that we're showing here, or the next neckline. Of course, it's a bit far off, 190, so we just focus on that one right now for trading purposes. We just focus on that 176. Again, we have completed the 1-2 here. It's showing as an AB. That wave C that we're doing right now, it must be a 5-wave structure. We expect, because there's a neckline here, that this has matured into a wave 1. That wave 3 is really a wave 1, not a wave 3. Alright, and it did a correction, very long, very lengthy correction. The breakout that we show always on our daily chart is a wave 3, and that wave 3 projects to 176, the next neckline, because before it does correct, it should do a neckline, and the next coming neckline really comes in at 176. So this means we're having, of course, positive momentum on the 1 hour, on 4 hours, on the day, on the week. It means this is cycle 3. Probably all the way to 176. This is what we're trying to highlight here. We have a trigger on the weekly here at that point, so we have a neckline here, and we had that same trigger back in 2015, and that was the trigger that took us all the way to 192. All right, let's take a look at the internals now. We'll start with the trade management because this actually adds up to what we get on the longer term charts. Okay, so this is the updated 30-minute, what we're seeing right now, the updated chart today. Let's check the market first. 166.57. This market did a high of 168.4. Okay, so this is the complete segregation of the current market advance. We all remember there was some kind of a degree 3 here. There's no showing, but there's really a higher degree 3 relating with that 4. There has been a 4A and a 4B and a 4C. All right. So long as we're having positive momentum on the 1 hour and on the 4 hours in particular, then we are not getting any more corrections, and this is a wave 5. Now, if we get negative momentum on the 1 hour, we're about to get negative momentum on the 30 minutes today. I believe we do have that. Let's take a look. Not really. If we get negative momentum on the 1 hour charts, we could expect that what we've been seeing is just a 4B, and we're still going to get a 4C. This is a very volatile issue, and why would we expect such very wild swings all the way down to 164 or even beyond in 4C is because of what we have already shown here on that weekly time frame, the chart. That weekly chart, you find that in that ending diagonal here, you have very wild swings that actually correct the whole move in the first place, or most of the move in the first place. So and the momentum was positive at that point. Right. So anyway, we go with the flow. Let's go with momentum. So we're looking at, this is the degree 3. This is conclusion of that move at 4C. This is a wave 5 so far. There has been a 1 and a 2. After that, internally, this counts as a 9 because it's an extension all the way to 5. There has been internal 1, 2. There has been a 3, 4. This is all momentum segregated right down to the 15-minute charts and 5-minute charts. So the counts probably are correct. There's a 5 and a 6. There's an internal 1, 2, 3, 4, and 7 here. Then there is an 8. The market already has finished 9, concluded 9. It already did an internal 1, 2, 3, 4, and 5. This is wave 9, really. This is wave 5. This is the end of it. That's why we expect maybe there's going to be wave C or high degree correction. There should be some kind of high degree correction that is a bullish flat or a translated flat or a runaway flat. That's what they call it. It usually is an A and a B and an ABC translated to the upside. We can add this as a 4C to that correction that we've been waiting for all the time. That at that point this becomes 4A here, and all of this has been 4B, and that is 4C. Usually a translated flat then would take you to 61.8% of the whole move. We're not showing this here, but we could get to show it when we go live. Right. So anyway, leg A of that flat for swing traders, that is we are going to be buying into that motive wave that we're seeing right now. So 1, 2, 3, 4, and 5 on the 30-minute and 1 hour charts. Leg A takes us to test the top of that level 1. This is the breakout high for the month, 165.5. We're now 166.5, I believe, very close to it. 166.6. Right, so we're looking at 165.8, and we're looking even at 165.5. Remember, the breakout high is 165.46. So we would want, for swing traders, we would want to buy 165.5, 165.85. We just have a hedge below level 4 here, 164. 164 relates with the fluctuation high for the current month, 163.81. It's at that neckline, where we actually expect to see final leg 4C. If leg 4C takes out that level 7, it's going to level 5, 164, 163.9. But anyway, as traders, we're only now interested to make that long. We will not be on the short side because the momentum is very strongly bullish. However, we can project the move down because, as you see, there has been now a market top in place, and we could take internal projections, internal fib extensions, to lead us all the way to point us to that level A, where we'll make that entry. So swing traders, swing here means you can expect all this over maybe 2 weeks, maybe less, but we go in keeping in mind that we hold it over a 10-day duration. Of course, with the fundamental impact that's going to be unleashed in May, this means that we get to hold it far sooner. Anyway, if we get to see that level, 165.85, 165.5, the breakout high for the current month, we buy it aggressively. All right, we expect to get next time into wave B, 170 and 169.3 and 169.7 are showing here before we get to that wave C. We have a hedge for these at 163.8. That hedge comes in at 4C itself, so most probably we bounce at that first neckline in a wave A to do wave B before we consider to take out that neckline and do a test of the hedge at 164.